Welcome back to another Weekend Trading Edge video. If you guys are brand new, my name is Akil Stokes. I am a Forex trader, a trading coach, and one of the co-founders over at tier1trading.com. And this is a weekly video I've been doing here on YouTube for the last, probably 10 years or so, showing you the best trading ideas that are on my radar to come. Now, I'm trying out something new this time. I'm actually broadcasting this live. I didn't tell any of you guys because I'm testing it out, and I already failed once. I did this whole thing about 5 minutes ago. The volume didn't work, so I'm trying it again in hopes that the volume does work. But I'm just playing around with some new ideas of how we can make this this weekend video more interactive. I get so many great comments. You guys love it. You guys love tuning into the premieres. I'd like to take the next step and make it something where you can actually join me live for the analysis, like how we do in the workshops or the live rooms. And that way we can actually involve in a conversation, assuming I figure out how to work all this stuff. So what I'm going to do today is this. I'm going to take you through my top 3 trading ideas for the week to come. Again, apologies for the marks on the chart. I just recorded this video 5 minutes ago, or did it live, and failed miserably. And at the end, I want to give you guys about 5 minutes to do some Q&A, and we'll kind of experiment on how this goes. So let's get started on trading idea number 1. Hey guys on YouTube, I see you already. Glad you guys are joining me. It's actually working this time. The first time it was on private, so no one actually knew. But we're going to start with the euro dollar, and this is going to be a follow-up on the idea that we talked about last week. So if you're new to the channel, make sure you chime in each and every week. Hitting that subscribe button helps. That way you're familiar with the ideas and you can see how they really build on each other from week to week. So last week, we were looking at this section right here, this highlighted section on the euro dollar, right? My mentor always told me, look left, structure leaves clues. And we're coming into a previous level of consolidation. Now, something to pay attention to is that red line. That is the bottom part of that consolidation. For me, that's going to be the most important part of it. And although we're in that area of consolidation around the 113 even handle, we're not actually at the bottom. So you want to be a little bit more cautious, or I want to be a little bit more cautious when it comes to entries. But when building a case to enter at this area, we have a few things lining up. Again, this is going to be a review from last week, but we have 2 AB equals CD patterns. So if we take this most recent move right here, swing high to swing low, we copy and paste that and draw in an equal measure move. You see we're going to have an AB equals CD pattern down here. We can do the same with the bigger move, swing high to swing low, A to B, copy and paste that. We're going to have an AB equals CD pattern down here as well. And also, if we take our Fibonacci extension tool, that's what these lines are down here. From our bigger A to B, swing high to swing low and back up, you're going to see a 1618 Fibonacci extension down there. We can do the same thing from our smaller leg, swing high to swing low and back up, Fibonacci extension and our lower leg as well. So that is all review. What is new is how price has ended this week. And we've actually put in what I would consider to be a negative sign. We came down into that zone initially, 113. You can see we had a nice high momentum bearish candle. There's some volume stuff happening here, which is beneficial as well. You can see the volume on this candle is larger than the previous candle, which has a larger spread. So that's typically a good sign of slowing momentum, or the momentum kind of shifting from one side to the other. We end with a doji candle down here as well. Now, this past week in our workshop, we talked about judging candles and really reading the story. So although this is a bearish candle in red, we actually look at this as a bullish candle, reversal candle, because the sellers got rejected by the buyers, and we closed in the upper third. And then we followed it up with a higher high, higher close candle right here. And this is something we call a 3-bar reversal, this combination minus the last one. And that's a pretty decent sign of reversal. And then we had a little bit of a Freaky Friday, and the market engulfed that candle, which is a negative sign. Now, we didn't violate the lows here, so nothing has been violated as far as like the double bottom or anything like that. But this could be a sign that says, hey, you want to be a little bit more cautious with your entry. So when going down to a lower time frame of 4 hour, you're going to see that beautiful double bottom down here. Boom. Here's our retracement. Here's our secondary test. You can see some nice divergence here on the RSI as well, right? Lower lows on your price chart. higher lows on our RSI. This is called divergence. These are all kind of clues that the market leaves us. This whole kind of thing we're doing where we're taking multiple approaches or multiple tools in our technical analysis. This is called the CTS system, or the combined technical scoring system, where we're taking different things, we're assigning a point value to it. And basically, as we have more of those things line up in the same area, we're building a point score with our trade. And the higher the point score, the higher grade trade it is. But one thing I'd like to see here before really anticipating a reverse, because again, we can continue lower, we are still within that zone of consolidation, is to take out this high. That will be a short-term positive move. A bigger positive move would be to take out this high right here. So I think the euro dollar is at a decent spot to start looking for a reversal, but we're going to have to see how price acts to see if it's really ready yet. Let's head on to our next pair here. We're going to head over to trade number 2, which is going to be the Aussie yen. I'm going to delete this for you so I don't spoil too much of the goodies. But Aussie yen here on the daily is at a situation where we've come into an inside level of structure, a previous level of structure. So if I take out my horizontal line tool and put it right in here, you're going to see this was a previous level of structure resistance. Price reacted off of there, and then we blew up, right? As we approach that level again, we would look for that previous level of structure resistance to act as a current level of structure support. Now, what's important to understand is that when it comes to structure, or really anything in the market, it doesn't really follow price to a T, meaning that we don't have an exact number, 8208, and that must be the number. Everything works in zones, right? So although we haven't technically hit that level, we are within that zone. And you can see that after the double bottom at the top, I would expect a little bit of profit taking from the sellers here. So we may see some type of short-term reversal. Hold on one second. Hey, buddy, I'm doing a live video, so you gotta head out, okay? That's the thing about going live, right? I got little kids coming in. Seriously, you gotta, yeah, hey, all right. You gotta head out and do a live video, all right? I'll see you in a little bit. Close the door, please. There you go, thank you. Look at that, learning on the fly. My assistant trader came in to probably yell at me about my euro dollar idea. But you can see the red line, right? So that's that level of structure here on the daily. We're very close to it here on the 4-hour. And what I would anticipate is some type of reversal. And again, when I say reversal, I don't mean any type of big term reversal. Like we're not going to fly up 1,000 pips or anything like that. But as a counter trend trader, just a short little area of relief before the market really shows us what it wants to do next. And a classic reversal pattern is a head and shoulders. And we may have a couple of those setting up. We may have a small one that looks like this. Let me actually bring this tool out here so I don't have to write it in. With our left shoulder, this being our head down here, and then price action reacting, giving us a return to the neckline, eventually a right shoulder, and then moving up, something like that. Or we may have a bigger head and shoulders pattern where you can see that this little area of consolidation right here can act as a left shoulder. This is still our head down here. These things aren't perfect. And a return up here would be our return to the neckline. And then a right shoulder, assuming it ends up being symmetrical, will be somewhere in this mesh point where you see price action found support, and then again, resistance right around here. And the cool thing is that if any of these were to happen, there's a good chance that that can happen within one more thing, and that's going to be a bigger advanced pattern formation. Because as we ebbed and flowed down, we've actually put in a potential advanced pattern formation. You can call it a harmonic pattern, a ratio pattern, however you want to call them. This is going to be a potential bearish cipher. So the cipher is going to look like this. X to A. Hey guys, I see you guys chiming in on YouTube. Welcome, welcome, welcome. X to A, our initial swing high to swing low. This little retracement right here is going to be our A to B. This extension down here is going to be our B to C. And if we rally up here to the 786 and really anywhere within that zone, that is going to give us the D completion of our cipher pattern, where again, we would be looking for a short-term short. So it would end up being the same type of motion that we would look for if we ended up getting either the bigger head and shoulders pattern or a retest of structure after the extension of the smaller head and shoulders pattern. So again, we're thinking way in advance here, but something that is certainly on my radar. Now, let's go to my number one trade of the week. And this is actually going to be a review of one we talked about at the very end of our workshop last week. Now, I keep talking about this workshop because I'm assuming you guys were there. But if you weren't, last week we did a 4-day free online trading workshop called the Ascension Workshop. It was about 10 sessions of absolute gold covering everything you need to know in order to become a consistently profitable trader. So we talked about technical analysis, how to read a trend, how to read a candlestick, really the story that a candlestick gives us, how to do top-down analysis. We gave you a trading plan, talked about risk management, money management, goal setting, the business aspect, the cipher pattern, more information than I can remember. Now, if you haven't had a chance to see it, you can still check it out. The full recording is going to be up until the end of the month. So I believe December 1st is when they're being taken down. Just head over to www.tier1trading.com. You'll see a banner that says sign up for the upcoming event. The event's already happened, but if you register, what we'll do is we'll shoot you the link to the recording so you can watch all 10 sessions in their entirety. Just remember, 10 sessions, they're about, about an hour a piece, a little bit more than an hour a piece, and they will be taken down December 1st. So just make sure you plan it out accordingly. But something we talked about in the workshop was the skill of technical analysis, and how the skill of technical analysis isn't kind of confined to a single time frame, not confined to a single market, anything like that. It could be used on any market, any time frame, any type of chart, and you could be dangerous. So it's important that you use it. And one thing that I routinely use technical analysis on is the Dow Jones. That's what we're going to look at as my trade of the week. Now, the only difference between this and maybe a Forex specific pair is that in Forex, I know that we consolidate a lot of the time, about 70% of the time. The Forex market is an individual battle between one currency pair and another currency pair. So when you're long, you're short. When you're short, you're long, that whole type of deal. So I don't really have an overall directional bias. And I don't know if you guys are the same. If you are, feel free to type it into the chat. On an index, a US index specifically, I have a bias. I always have a bullish bias because historically that's what these indices do. They go up. So what I'm looking for is chances of retracement, chances, opportunities where the market has put an outside return so that I can add to my position at a cheaper price. And that's what we're having right here. So most recently here on the Dow, we've put in a higher high, higher close. You can see that we have a few things happening here. We have a new structure high. We have a bigger retracement right here, and we put in a new structure high here. We've also put in a little small, tiny new structure high and outside return as well here. And this previous level of resistance, once broken, I'm looking for it to act as support, meaning that this is going to be the first chance of where I look for price to come to. We also talked a little bit about Elliott wave action here. I'm not a big Elliott wave guy, and by that I mean I don't use it at all, but I do understand Elliott waves. And how Elliott waves work is you get a series of moves like this, with that second move typically being, or is, the longest, and then you get a complex pullback before the market may go on its way here. And if we do get that complex pullback, or I should say we already got that complex pullback, this also forms something else, and this is going to be another advanced pattern formation, right? This move right here, swing low to swing high, is going to be our X to A. This initial retracement down is going to be our A to B. This is going to be our B to C right here. And then our CD completion is going to come right at our 886 for a bullish bat pattern. Now, typically when you're looking at advanced pattern formations or harmonic pattern formations or ratio patterns, whatever you want to call them, they tend to come in periods of consolidation in the market. So when the market's kind of going sideways, bouncing up and down, kind of making up its mind on what it wants to do. However, they sometimes will come in the same direction as the trend. And when they do, you can use them in a slightly different way. So instead of just using them as a counter trend opportunity where you're in, you're out, and you're waiting for the next opportunity, you could look at it as a way to aggressively involve yourself in the next move of the trend. And that's what I'll be looking to do here. So looking at this advanced pattern formation as a bat pattern completion, look for my arrow button right now, and then looking for that as an opportunity to involve myself in a pullback and involve myself in the bigger extension of the trend here on the Dow. So those are my 3 trading opportunities of the week. My 3 top ones. I had a lot more. Do me a favor. Again, I mentioned earlier, this is my first time going live and streaming to a few different platforms at once. I have no idea how this is going. I don't know if you guys can hear me this time. I don't know if it's choppy, if you can see me, but do me a favor. Give me some feedback in the comment section below, specifically on YouTube. That's where I'm going to go to really check the comments, and let me know a few things. Let me know if the sound was good. Let me know if the broadcast was good, meaning the clarity, if you can see everything. Let me know if there's any glitches or delays or stuff like that. Also, let me know what you think about the idea of doing this as a live weekly video instead of just posting it for you guys and joining me live during the premiere. Again, my idea is that we can do a few things. One, I could deliver my top 3 trading ideas, but it also gives me a shot to answer questions if the delay isn't too bad while we're kind of real time here, instead of kind of going through the comment section and trying to, remember what exact point you were talking about. Again, one of the things we've done each and every year at Tier 1 Trading is not just trying to continue to develop ourselves as traders, but continue to develop ourselves as educators and just being able to be the best coaches and educators that we can for you. And we don't know that unless you give us feedback. So leave a comment below and let me know. I'm looking at the chat right now. Bradford says we can hear you clearly. It looks like there's a bunch of a little bit of a delay. I'm going to test it out real quick before I let you guys go. But let me know, type in a yes on YouTube when you hear me say the word 3. 1, 2, 3. And by the way, if you guys are watching, just a reminder, check out those Ascension workshop videos before they are taken down. Looks like, okay. So it looks like there's about a 10-second delay, so that's not too bad. Yeah, so I think what we'll do is in the future, again, I'll play around with this throughout December and see if it's something I want to do in 2022. But in the future, if we do end up doing this as a regular basis, we'll leave like a 5-10 minute period at the end where you guys can either ask questions and I can answer you live, or we'll do like a bonus pair. So Akil's top 3 trading ideas for the week. And then the bonus pair or bonus market will be something that you guys ask about. So if you have an idea that you want to look at, say, hey, Akil, what do you think about this on that? Or can you look at that or that? And we can make it more interactive. I think that'll be kind of cool. So awesome. Thank you guys that joined me live for the feedback. Definitely taking notes for you guys that are watching the recording. Again, leave your feedback in the comment section below. I'll read through it and we'll probably try it again next week. All right. Till next time, plan your trade, trade your plan, like it, subscribe it, do all that fun stuff you're supposed to do. And I'll see you guys next week.